What if one decision could have made you a billionaire, but instead you walked away with nothing? Throughout history, people have made some truly awful financial mistakes. Missed investments, reckless spending, billion-dollar blunders. These decisions didn't just cost money, they ruined lives, destroyed companies, and left people wondering, what if? Welcome to 3x3 Finance, where we break down the biggest money mistakes ever made. Today we're looking at 5 of the dumbest financial decisions in history. Decisions that cost people millions, even billions of dollars. Let's get started. Imagine being offered a fortune for just a few bucks, and turning it down. Back in 2010, Bitcoin was nearly worthless. You could buy 1,000 BTC for less than $100. But most people thought it was a joke. Enter James Howells, an IT worker in the UK. He mined over 8,000 Bitcoin when it was still easy to do. At the time, it was worth so little he didn't even think about it. In 2013, he accidentally threw away the hard drive that stored all his Bitcoin. Fast forward to today, those 8,000 BTC are worth over $500 million. And the worst part? He knows exactly where the hard drive is, buried in a landfill. For years he's tried to get permission to dig it up, but the city won't let him, saying it's too dangerous and expensive. So now, his Bitcoin fortune is rotting in a pile of trash. Morale of the story: don't ignore new technology and never throw away your hard drive. How many times have you looked at a stock and thought, I'll pass? That's exactly what happened to Ronald Wayne, one of Apple's co-founders. Back in 1997, Amazon was just an online bookstore. Its stock was trading at $5 per share. Many investors thought it would never survive against big retailers. One investor had the chance to put $10,000 into Amazon stock. Instead, he said, I don't trust online shopping. It'll never take off. If he had invested, that $10,000 would be worth over $14 million today. But that's not even the worst part. He wasn't alone. Even Jeff Bezos' early meetings with investors were met with laughter. Wall Street analysts called Amazon a joke for years. Now, Amazon is worth over $1 trillion. Morale of the story? Just because something seems small today doesn't mean it won't take over the world tomorrow. How do you blow $100 million? By buying tigers, sharks, and cars you don't even drive. Meet Allen Iverson, one of the most legendary NBA players of all time. He made over $200 million in salary and endorsements during his career. But instead of investing, he spent money like it was never going to run out. Here's what he blew his fortune on. A 40-person entourage that traveled everywhere with him. Exotic animals, including tigers and a pet shark. Shopping sprees so massive he left bags of cash in hotel rooms and forgot about them. By the time he retired, he was completely broke. The good news, Reebok had set up a trust fund for him. When he turns 55, he'll get a $32 million payout. But until then, he went from living like a king to barely affording a normal lifestyle. Moral of the story? It doesn't matter how much you make. If you spend like crazy, you'll lose it all. Sometimes turning down a deal can cost you everything. Meet George Bell, former CEO of Excite. Back in the late 90s, Google was just a small startup. So, what happened? Google's founders offered to sell the entire company to Excite for just $750,000. Bell refused. He didn't think Google was worth investing in. A year later, Google tried again, this time for $1 million. Excite still said no. Fast forward to today, Google is worth over $1.5 trillion. If Excite had bought it, they would be one of the most powerful companies on the planet. Instead, Excite went bankrupt. Moral of the story? Sometimes saying no to an opportunity is the worst decision you can make. How do you lose $500 million with just one small mistake? In 2021, Citibank was trying to make an interest payment on behalf of Revlon. Here's what happened. Instead of sending a few million in interest, someone accidentally wired out $900 million. That's hundreds of millions more than they were supposed to send. Some lenders refused to give the money back. Final cost? Over $500 million lost. And the craziest part? It was all because of a simple clerical error. This is why banks spend billions on fraud prevention and cybersecurity, but all it took was one human mistake to lose a fortune. Morale of the story? Even the biggest institutions can make dumb mistakes. Always double-check before hitting send. While the 5 stories we covered are some of the dumbest financial mistakes ever made, they're far from the only ones. History is full of jaw-dropping money blunders, some caused by greed, others by arrogance, and a few that are just plain bad luck. Before we wrap this up, let's look at more insane financial disasters that will make you cringe. Imagine having the chance to own a chunk of Apple before it became one of the biggest companies in history, and saying no. In 1976, Ronald Wayne was one of the 3 co-founders of Apple, alongside Steve Jobs and Steve Wozniak. Here's what happened. As Apple started gaining momentum, Wayne got nervous. He thought the company might fail and didn't want to take on any financial risk. So, he sold his 10% stake in Apple for just $800. Today, that 10% would be worth over $300 billion. The worst part? He never tried to buy back in. He spent decades watching Apple take over the world, knowing he could have been one of the richest people alive. Moral of the story? Sometimes the best investments feel risky at first, but walking away can cost you everything. Ever heard of someone investing their life savings in stuffed animals? Meet Chris Robinson, a businessman who believed that Beanie Babies were going to be the next big long-term investment. Here's how he lost everything. In the late 90s, Beanie Babies were worth thousands due to insane demand. He went all in, buying over 20,000 Beanie Babies thinking he'd sell them later for millions. Then, the market crashed, prices collapsed overnight, and his collection became worthless. He lost over $500,000 and ended up broke. Today you can find most Beanie Babies for a couple of bucks at thrift stores. Moral of the story? Trendy investments can disappear overnight. If something seems like easy money, be careful. Sometimes firing the wrong person can cost a company everything. Back in the early 2000s, Yahoo was one of the biggest tech companies in the world. They had an engineer named Brian Acton working for them, but in 2007 they decided he wasn't valuable enough to keep. What happened next? Acton was fired from Yahoo and struggled to find a new job. So, he and a friend launched a small messaging app called WhatsApp. A few years later, Facebook bought WhatsApp for $19 billion. Yahoo fired a guy who later built a company worth more than their entire business. Moral of the story? The people you underestimate today could be billionaires tomorrow. What can we learn from these terrible financial decisions? Every one of these people made a choice that cost them millions, or even billions. A guy threw away a Bitcoin fortune. An investor ignored Amazon when it was dirt cheap. An NBA star blew his fortune on unnecessary luxuries. A CEO refused to buy Google and went bankrupt instead. A bank lost $500 million because of a typo. The biggest lesson? Sometimes the worst financial decisions aren't about losing money, they're about missing opportunities. If there's one thing you should take away from this, it's this. Think long-term. Don't ignore new opportunities, and never assume money will always be there. Which of these stories do you think was the dumbest? Drop a comment below. And if you want to hear more insane financial stories, hit that like button and subscribe, because trust me, you don't want to miss what's coming next. Thanks for watching 3x3 Finance.